Hello! Welcome to the second video of the Financial Consolidation course. In the previous video, I explained to you part 1 of consolidation process, which is called synchronization. In this video, I will show you the second step of consolidating in Diamond, which is called elimination. Let us assume that company A holding has subsidiaries, companies B, real estate, and C, operating company, that are included in its consolidated financial statements. Company A is the parent of the group. The shares of company B and C are 100% owned by company A. Intercompany eliminations are used to remove from the financial statements of a group of companies any transactions involving dealings between the companies in the group. Usually, such companies have mutually related entries in their individual financial statements, which affect final consolidated statements. In such cases, it is logical to identify and get rid of the corresponding double counting in consolidation. So, for example, the company C rents ground from company B for 20,000 euros per year. Company C pays 20,000 euro per year and company B receives this money. For the consolidation, this can be eliminated since 20,000 euros minus 20,000 euros is zero. Diamond provides ability to eliminate these lines in the consolidated document. After synchronization of the individual companies is finished, you can start elimination. The synchronization process is covered in Consolidation Part 1 synchronization video. Before you start eliminating, it is advised that you make an overview of the eliminated rows. This simplifies the elimination. Elimination are, for example, used for loans to group companies, current account companies, interest income or expenses from loans to group companies, etc. I've created the following overview of the elimination in our example. It can be downloaded. Remember that you should always open consolidated file first. That way, Diamond will open the set of all source files at once in the correct order. In the tab Edit, you can find the Elimination button. It will be active only if the consolidated file is currently in focus. But before we start, let's adjust the consolidation update settings. I select all of the history, forecast, and realization periods. I turn off Update for manual corrections for now. The manual corrections part is explained in separate video. Press Save. Now all is ready to start the elimination process. I select Elimination button. First, the pop-up appears whether you want to use existing settings from the previous elimination. I select No. Currently, company A is selected, which can be seen in the right upper corner. In the first column, you can see the rows of the selected company, which should handle the relevant elimination item. In the second and third column, you can see the rows of the other companies. Elimination items 1 and 2 at A, investments in subsidiaries. Now I start eliminating the first 2 items on my list. Investments in subsidiaries, since the assets of the subsidiary companies are partially financed by the parent company. I go to Financial Fixed Assets, where investment in subsidiaries are located. I click on a pop-down menu at None in the Company B Real Estate column and select Correction Net Worth for consolidation. I do the same in Operating Company C column. The result of this elimination is shown in this screenshot. For example, the history year 2019 is chosen. You can see that the respective amounts of companies B and C in the consolidation are 0. The eliminated value of the investments in subsidiaries is included in line correction net worth for consolidation under net worth. Eliminating items 3 at A, share in result from subsidiaries. Let's eliminate the item number 3, share in result from subsidiaries. Note, usually only history periods are eliminated. Select forecast and realization only in case if the share in result from subsidiaries in a source file is booked in the respective year. Eliminating items 4 and 5 at A, current account group companies. Now let's eliminate items 4 and 5 at company A, current account group companies. I go to current account group companies under receivables. The respective lines under current liabilities are selected by Diamond automatically. Eliminating items 6 and 7 at A, loans to group companies, interest income from loans to group companies. Now let's eliminate the loan to company B and interest income from it. I go back to the financial fixed assets, loans to group companies, and select B, real estate. Then I go to financial result, financial income, financial fixed assets, loans to group companies, and select subordinated loans, loan from A holding. Eliminating items 8 at A, mutual transactions between group companies. I go to net sales management fee. For its holding activities, company A receives a management fee from company B and company C. It should be eliminated as well. In company B, the cost of management fee is placed at operating expenses, staff expenses, other staff expenses, and then management fee. For company C, I select the same row. And then finally, let's switch to the company B post overview since all the items which still remain on the list should be handled here. Eliminating items 9, current account group companies. The current account of group companies at B shows that the link with current account group companies with A holding has already been created. This link is already indicated at elimination item at company C as well. So I just need to add link with company C. And again, you can see that the respective lines under current liabilities are selected by Diamond automatically. Eliminating items 10 and 11 at B, mutual transactions between group companies. A portion of the rent is not paid at the end of the year. This amount is included in the balance sheet under receivables. So I go to the receivables, account receivable trade, rent, and select accounts payable other, office expenses, rental costs at company C. Lastly, let's eliminate the net sales of the company B. Since company B also rents property to third parties, the rental income thus won't be zero. Now all the elimination posts are added. You can export elimination settings to Excel by selecting Export Data. This way you will have the eliminations per company in a clear overview. You can also discard all the eliminations by selecting Reset Grid, and you can cancel the ongoing process. I select Eliminate to proceed. A pop-up appears to save elimination settings. I choose Yes. This setting can be used again when you need to redo the consolidation. At office expenses, you can now see that no rent is shown in the consolidated Diamond file. However, this doesn't mean that there will be no rent costs in the source files. It is possible to see the individual values of the companies next to the consolidation side by side. Click right mouse button on the desired period and select Consolidation Analyze. To deactivate the consolidation analysis, click the right mouse button and choose Enable Consolidation Grid. Here you can see also the corrections column which shows the actual elimination amount. As I mentioned before, this topic will be covered in a separate video. Thank you very much for watching.